Welcome back, traders and investors. We have Michael Kahn on the line here, chartered market technician, been working with charts and doing technical analysis since 1986. Currently a columnist for Barron's Online and editor of the Quick Takes Pro Daily newsletter. Michael, how you doing today?
Hey, doing pretty good.
So you're a technician. So could you just give us a brief background on what charts you like to follow, what time frames, and what indicators you use?
The thing is that I'm not restricted to any sector or time frame since I'm kind of a generalist and I write for all kinds of outlets. But for my own personal likes, I'm looking at like a swing trader type of time frame, a couple of weeks tops. I'm not really looking at putting money away for forever. And the kinds of stocks I look at, it's whatever is in vogue, really, not what's in vogue in the news, but whatever is in vogue on the charts. Right now there's a big split in the small caps and the big caps, so I'm looking at maybe some small caps are going to start catching up, and I will start with just looking at small caps and seeing if any of them have some chart patterns that look worthy of further analysis, and there are plenty.
Do you have a couple examples, like something that you're eyeing right now?
Well, I actually wrote one up a couple of weeks ago for a website, and it's called iRobot, IRBT. And, it was in a downtrend with the small caps, bottoming out sometime in May. And the technicals picked up around mid-May, did a reversal for the non-technically inclined. It just made a new low but closed higher on the day, which is a sign that something changed intraday. Sentiment changed, investors changed demand, whatever it was, something changed for the better, and it followed through and had a pretty nice rally from around 30 to about 38 before pulling back, and it pulled back on no volume. I mean, if you look at the chart, I know volume is like the redheaded stepchild of analysis these days, but there was just no volume on the pullback, meaning we're suggesting, I should say, that investors weren't running for the hills, they weren't cashing out. I mean, it's just they're sitting tight because they still believe in this stock. So, looking at it now in a pattern that you might call a bullish flag, really just a correction and a rally. And I'm waiting for the next sign that this thing is going to continue higher. Is that a breakout of the flag? Is it a price up, say, 35 or something like that? I can't give you a specific because just everything changes day to day in this market. But that's the kind of thing I'm looking at. And I would say that if small caps are for real, if they are going to at least hold their own, they may not outperform, but at least they're going to come back a bit, then this is probably positioned to be a pretty good winner.
Michael, do you look at the 50% retracement at all on that? Because interesting enough, the IRBT hit that low at 30, and then on the initial 4-day run, it got up to $38, and just yesterday pulled back to 33.86, which the quick math looks like that's right about at the 50%. Do you use that at all on any of your technical analysis?
I'm not going to give you a satisfying answer on this. I use everything.
Okay.
I do have a checklist of things that I run down on. The first and primary thing, of course, is trend. And then I'll look at some averages just to get an idea of where it is in relation to the trend. And then I'll look at an indicator or two, a momentum type, an RSI, or whatever. I'll look at the volume, a cumulative volume, or on balance, if you will, volume. So I'll look at all those things. And yes, I will look at retracement, see how far back it's come from whatever move it just made. So yes, 50% retracement, sure. I'm not going to say that's the thing that says, okay, time to buy.
Okay.
Right.
So you're still in this. You're looking at this pullback here. It kind of has an interesting chart pattern here. You've had since you made that 38.06 high, you've had 6 lower highs, just about the same lower lows. Now you're getting some consolidation here. So is this something? You're already done with the trade? It went from 30 to 38, and you're out. You're looking to buy it on a pullback, or are you just washing your hands of it?
Well, the thing is, I get to say that I'm an analyst and not a trader.
Okay.
And I can say I'm looking at this thing with fresh eyes today.
Okay.
What do I do about it today? And if you look at an intraday chart, you'll see a nice smooth declining trend with possible oversold conditions if you look at the pre-market bid-ask. So the thing is, I'm waiting for the next setup, which is now, and then you wait for the trigger, which would be the breakout. So I kind of went around your question a little bit.
That's okay. That's okay. What do you got on? What are the charts telling you on Apple?
Apple's. I'm mad at Apple.
Some people are really happy, some people are really mad, and some people
No,
are like, eh.
I'm so mad. You know, I when it pulled back, it gapped down in January. I said,
Yeah.
hey, this is a buy, and you know, I rode out the rough times, and then I saw the gift and the gap up in April, whatever the news was, I don't remember anymore. So it
Yeah.
gaps up in April, and
7-1.
it's at a price that on the charts is a resistance level. I say, you know, I'm taking my gift, and away I went. And of course, you know what happened after that. So I'm mad at Apple. There you go. But just for again, if you just look at it with fresh eyes, just coming into it today, I see a stock that is had a very very strong couple of weeks, and you know, just looking at simple indicators, it's overbought, it's extended. Doesn't mean it's going to reverse, but you know, the odds are increasing when these indicators are overbought. That may not be the best time to buy it. Certainly not going to sell it. I mean, its trend is up. But you know, you look how far away it is from its moving averages. I mean, if it's where is it 644ish or whatever that is, you know, its 200-day average is, you know,
Way
more
down.
than 100 points away.
Yeah.
So you know, it's just stretched above these averages. So it's just an element of risk there.
Uh, do you pay much attention to Wall Street analysts? I mean, you're being a columnist for Barron's online. I mean, that's where I get my fundamental information. Besides from the Benzinga News Pro, I get a lot of the fundamentals from Barron's. Is that something you pay any attention to, or you just stick with the charts?
You know, the greatest signal is when Wall Street downgrades a stock to a sell, because it's usually the bottom. Um, I say that because a lot of times the stock makes its move, and then the fundamentals catch up, or it gaps down, and everyone says, "Well, we can't have a buy recommendation on it if it gapped down, so we got to make it a sell," and that's usually when everything is just falling apart. The washout is there. So I'm looking at Wall Street analysts, but I'm not really following. You know, if they upgrade it, you know, I'll look at it as an after the fact. I say, oh, the stock just moved. What happened? Oh, everyone jumped on it because so and so, you know, upgraded it. So I'm not looking at that. I'm not going to lie and say I ignore fundamentals, even though I'm a technical analyst. I can't ignore it. You know, whatever's out there, it has some value. So keep an eye on it. But that's not really the way I would say buy or sell anything. I would look at the chart.
What about Twitter here, Michael? Because obviously it's had the huge sell-off. Everybody hated the stock when it started breaking under 30. I think everybody on CNBC was like, "Oh, the story's over. It's just dead." And then we had a few upgrades, and then it's kind of found life and it's kind of found support down there, and it got back down there to try to retest that 30 area. But then Namura upgraded, and now it's starting to get a lift here again. What are your thoughts here on Twitter? Is this showing some life to you?
Well, you know, if I'm looking at the charts, I'm looking at a stock that fell apart, and in what is that, late April, early May, is at a selling climax. You know, the thing was already in an established downtrend, and then it just jumps down with a huge range and huge volume. I mean, that's capitulation. That's everyone throwing in their hands, up their hands, and saying, "All right, this thing's not going anywhere. It's just going to die." And you can see what happened. It didn't die. It's floundering. It's not moving anywhere. I mean, obviously the intraday changes are good percentages to trade, but overall, it's not going anywhere. So it's not dying. Maybe that was a selling climax. Maybe everyone who really hated this stock has already sold it. And you know, you keep tabs on it. You wait for it to show some accumulation or some sort of signal, and it's going to, you know, the bad is over. And that may have been it. You know, this big rally was it a week ago or so, and a pullback. You know, how did it look? Did it jump up on volume and pull back on no volume? And it kind of did. So it's definitely something to consider.
Dennis and I are kind of old school technicians, and we really rely the technical formations that we like are double tops and triple tops, double bottoms, triple bottoms. Sometimes you even see quadruple or multiple, even more than that, sextuplet. Is that a technical formation you pay much attention to, or for breakout? Do you use it for breakouts or breakdowns or potential stop areas, or are you a little bit more sophisticated than we are?
Oh, I'm so simple.
Okay.
a double top is a great sign, but a lot of people look at two highs, for example, that are around the same price and call that a double top. Well, it's not a double top until it breaks down. Just that at that point, it's just resistance. So I have a little issue with the way people are labeling it. But if you see something that forms one of these classic technical patterns and has some sort of confirmation behind it, whether it's sentiment or volume even or momentum, just something behind it to confirm. Say, well, this is something for real. There's a reason why these patterns form. People are acting in a certain way. They found a price they thought was expensive and they sold it, and it crept back up and they sold it again at that price. Well, what happens if it moves through that price? Well, everybody changes their stripes and they buy it. But then, if it's a double top, it's not going to get through that price, and it's going to come back down and go through that. Well, it's kind of hard to explain this now without the picture in front of everyone. Think of the double top as an M. When stock breaks below the middle of that M pattern, it's the sellers are winning, and that's I do use that. I would definitely say that's a pattern to keep track of. Triple top, kind of pushing it. I don't think you're going to get more than a triple. I think if you're going to four tops, you're really in a trading range and not a topping pattern.
Okay.
What are your thoughts here on the overall market, Michael? We've been just marching and marching and marching, and it seems like nothing derails this bull. Every time we pull back to buy, the dippers just come in. Even if we get a sell-off in the morning, it seems like by the afternoon they've already bought the stocks higher. Do you see this just continuing here, or is there something eventually that's going to derail this bull?
Well, I've been skeptical for the last, year, but not. I mean, fighting it bits and pieces, but not overall fighting it. I mean, you have to acknowledge, what's going on. What I think should happen, of course, is not what the market thinks should happen. The market's its own thing. So yeah, it's new highs are bullish, and higher lows are bullish, and a market that fights through everything. Yesterday was ridiculous with these economic reports, and the thing ends up at a higher high. So I don't get it with the news. You just follow what's happening, which is, as you said, they buy the dip, and you stick with it until it doesn't work anymore. Now, with that said, there's still plenty of things that I think are real issues. And if I wrote yesterday in Barron said, if the big caps stumble, if they stop doing what they're doing, there's a lot of weight on the market to bring it down. And the small caps are recovering, but they're still underperforming. And at some point yesterday, they hit a new low in relative performance versus the big caps, even though the small caps have this technical breakout in place. So that's not a good thing. And the financials are not too happy. Banks just I don't think they look that great. And can the market go up without those things? Sure, it can. But it's just a problem. You have to be aware of it. And maybe you have a split idea of what the market is. Big caps are going up. That's a bull market. You stick with it. Small caps maybe not so much. Financials not so much. Well, you don't buy them, or you try to short them and maybe fight it. But it's going up till it's not going up, and that's the only way to look at it.
Okay, do you do your analysis like at the end of the day, and then will initiate your trades or your actions in the morning, or are you apt to try and take advantage of the intraday fluctuations to to put positions on?
Well, because I have so many deadlines, I write for a lot of places. I got to put everything at a certain time frame during the day. So for our newsletter, for example, I do the grunt work the night before and the actual analysis that morning because I want to see what happened overnight. I mean, Europe and Asia is just a big part of the market now. It wasn't that way before, but it is now. And I do that in the morning. As far as Barron's goes, I mean, it's a culmination of what's going on in the days leading up to the article. So, it's just a different outlet, so it's a different method.
And how did you learn about technical analysis? It was just old-fashioned way reading books. Did you take any courses? And I was just asking for the people in the chat room that want to learn more about technical analysis. Lot of different indicators, a lot of different books out there. Is there anything that you would recommend to our listeners?
Sure. There's a couple things I recommend. There's the usual books that you'll hear about: John Murphy, Martin Pring, and I like Richard Schabacker, one of the old masters of technical analysis. It's Schabacker. As far as where I got started, I was working on the muni bond desk at Merrill Lynch as a 20-something, and answered a job ad in a software company, which just happened to be a trading software company. They're looking for a product manager, and from there, that's where I learned analysis. I had to know what my customers were doing, and I just learned it and started writing about it, and that's really where it started. I have not read Edwards and McGee, and I feel everyone shooting arrows at me. I just never sat down with that book. But,
It's a
I've
tough
been
read.
doing it for, 25 years already, and I think I've figured it out a little bit. I've also taken the CMT, process, Charter Market Technician, so I've had to read those books and take those courses and testing. So there is some formal training in there. But the advice for anyone who wants to get started is to, start charting, start looking at stuff, look on the feeds, look on your site, look everywhere for ideas and see why. Why does someone recommend it? What do they see on the chart? And then you'll pick up what they're looking at, and then you'll formulate your own method.
What product software company did you start out with?
The company was called Trade Center. At the
Okay.
time, it was the most sophisticated thing out there and very expensive. Don't forget, this is in the 80s. I mean, Windows wasn't really around yet. And they were bought by Knight Ridder Financial, which was bought by Bridge Information Systems,
Yep.
which bought the farm in 2001. So that's the progression.
Okay, and any final tips, any stocks on your radar today that our traders should take a look at? Something maybe you're looking possible buy or something possible sells. I mean, you don't want to sell anything in this market, of course, but anything you want to alert our subscribers to?
Again, looking at some of the small caps, I know I kind of talked them down a little bit earlier, but the small caps do have a breakout, even though the whole sector is lagging. Biotechs do have a breakout, and I actually put in my newsletter this morning, Illumina, ILMN. Just looks like that one's ready to break out to follow the biotech sector.
Oh
And,
yeah, that's a nice
again,
looking
and the
chart
other
there.
things are big caps. Maybe even a Google.
Okay. All right. We've had Michael Kahn on. He is a chartered market technician, a columnist for Barron's Online, and the editor of the Quick Takes Pro daily newsletter. He's also found time to write a few books. So, Michael, thanks for coming on, giving us your approach to technical analysis, and we sure hope we can have you on again.
Awesome. Appreciate it. Thanks.
Thanks, Michael.